everybody. This is Mickey Mao with CartoonMoneyPrinters.com. It is 4:20. It is Sunday, and we're about doing Asian market opens right now. So I am with Astronaut Toad. Why don't you go ahead and say hey?
Good morning, afternoon, evening, everybody.
Yeah.
New day, new week.
So let's see here. Everybody, if you want to join the group, go to CartoonMoneyPrinters.com. Click the Start Now button, and then you'll onboard through Whoop.com. But aside from that, let's jump right into it, my friend.
Yeah, it's been a really boring weekend. I have not seen this much dead price action on Bitcoin in a while, but let's mark it out. So I'm on the 15-minute chart right now. This is Thursday, Friday. Friday was already dead as well. Friday market close. Am I on UTC? No, let's set this to New York time. New York time. Market closed Friday afternoon, right around here. And it's just been doing nothing. So we've got tightening CPRs. These are pivot ranges. And see how this one was just incredibly tiny. That is a ridiculous, what's this? 57 bucks, 60 bucks, a $60 pivot range. So BTC has been just absolutely boring over the weekend. And it just got more and more tight. We had a dip here, but now I'm thinking that based on, let's go out to our biggest time frame that we'd like to use the par on, our par indicator, and let's check the 4-hour. Look at how flat this whole thing has been.
Ooh.
Absolutely wild. Like, this is from last week. It's been an entire week of nothing. So the market's been crashing, and I'll pull up the NASDAQ stock market in a minute. But we all know the economy's been absolutely going nuts. Based on the tariff situation. But this whole past week has been relative silence. Well, here's what I want to teach everybody today based on this. When you retest a level, a low, let's clean up the par so that we can see just the 4-hour and the 1-day par. Okay, this is a price action reader indicator. And hold on, I'm running low on resources. Let me close Google Chrome here. All right. So we've tested these lows. See how this right here was a very nice, this is a classic trade setup. I'm sure that some of us took it, but I've had a ridiculously busy week. But look at this. Right there. There is your slightly lower low. So that is a bullish divergence with this blatantly obvious higher low in the par. Okay. So we've got bullish divergence, and the 1-day par is in oversold territory. Those are our two criteria for our main big old gigantor trades. So even if you had gotten in, you might have jumped the gun on the boost of this candle. Or if you had waited for the par to really look good, it would have looked good at the close of this candle or this candle, which would have given you some great risk reward on this whole situation. Back up to this level, we're looking at a 1 to 5-ish risk reward. By the time you get any trade to 1 to 5 risk reward, you should be almost completely out of that trade. So at this level, here's what I think happened. People bought like crazy down here. We had just absolute panic in the market. Everybody's panicking. So what are they doing? They're selling to the people who are patiently waiting.
Yeah.
When you have a bunch of panic sellers, they're selling, they're either getting stopped out or liquidated, or they're just freaking out and market selling. Either way, all of those categories of people, think about it. Those people are selling. They are in a weak mindset, and they are selling to people with a strong mindset. Okay? That's the important thing here. And when that happens,
I have a few things to contribute while we're talking about the specific price level right here, this price action. Please continue.
Yeah, I'm almost done explaining the psychology of this. When you get that situation of capitulation, it's called, where tons of weak people, emotionally easily swayed people, dump, either they FOMO in and all buy, they're probably buying the top, or they panic sell, they're probably selling the bottom. And so what happens is you have a player who is getting in at these lows to the tune of millions of dollars or whatever. You have to trust that that is a market maker who knows what they're doing. Therefore, they are going to hold and take profits wisely. So they're holding for this higher level, and they get a pump, and they're also selling because they know that this is an incredible risk reward trade. Like, this is free money for them. So what they're doing is they probably sold at this candle a ton at this level, because this was a historic level, crash price back down, people bought more because they thought it was going to the moon, and now it's just trapped right here. So what's happening is the big players, market makers who bought in down here, they have sell orders set here, and the buyers are just chewing into those sell orders. But these people are making tons of money, so they don't care whether price goes higher, drops back down, they're still making money. What's happening is those people, those same players, are probably reinvesting a little bit of their winnings down here at the bottom, driving price back up so that they make more money selling at the top, until their average entry price from this entry down here gets close to here, at which point they're not having free trades. You know, if you got in down here for $1,000, you can risk another $50 or $100 up here all day long, because your average entry price is still way down here. So the big players are locking Bitcoin into this price range, and it looks like it is holding the level, which means, in my opinion, it will go higher. There could be a terrible fake out to get down, because there is a lot of empty space down here. This is a completely untested pivot. This level, 82,520. That should get tested. But same thing. If it crashes down here, people are panic selling, somebody's patiently buying, and then off to the moon it goes. And that's my basic analysis for the whole coming week. Is we're probably going to see a crash to test this, and the par is kind of rolling over, you can see. But when you get a price holding a level like this, it usually, if it holds the level this long, it usually wants to eventually go higher. So that's it. That's basically all I have to say. Can you guys hear me?
Oh, sorry about that. I was talking. Okay, so right before your trade there's that little bounce. and then it comes back down and retests it. That was a front running the previous all time high as well as a fair value gap there. So to me, this spells out bullish. The fact that there are buyers out there that don't want to see price go anywhere near the previous all time high and back into that range. Um, I think it bodes well for a bullish outlook.
Yeah.
One thing I want to point out too is look at the dates of that rejection from the previous all-time high. April 8th, April 7th. What's happening around this time? I think tariffs, of course. That's the chaos and the fact and the wind.
Yeah.
But also it's tax season, so I wouldn't be surprised if some people were locking in profits and they're getting ready to essentially file their taxes here in the U.S. Um, so
Yeah.
that could be why it was a big move, but not the biggest move, is because some people were selling off, getting into uh their tax forms and all that stuff, getting their capital gains filed and everything. So I bet they're waiting for return on that or to see how that resolves, and then
Yeah.
we'll probably see another re-entry into the market one way or another, in my opinion.
Look at how dead and boring this is.
I know
Man, that...
you're losing bandwidth here.
Oh, yeah.
Yeah.
Drop it down.
Oh, a little better. And if your phone's in between your computer and the router.
Yeah.
But yeah, I mean, I could totally see major players rocking out. There's selling off some Bitcoin, repositioning.
Yeah. And so here's my play is we have a long active on. For some reason, my prop firm's not letting me get into a Bitcoin trade, and I'm really annoyed about that because it's re-approaching my entry. We have the market smasher strategy has a long in play. It already paid off because it dipped over the weekend. This is MBT. This is the CME. So it had a gap, missing time. But now we're approaching this entry level again. And this signal, this squeeze signal, does indicate that we should go higher before we go lower. So I was expecting some form of a blow off top before retracing down to grab more liquidity down below, because that's how you steal the most money from the most people, is you get this, and we got a 4-hour squeeze as well, so it's gonna possibly bounce off the top of this. But yeah.
And that was showing a clear consolidation, and we're expecting manipulation at this point for distribution, if it does follow that model.
Yeah.
I just wanted plain old boiled egg. That was it.
Moist.
Good morning.
How's it going?
What's going on?
Not much. Glad to have you.
We are just remarking at how boring the market has been lately. This just flat line of nothing here. Had a beautiful trade on the par and pivots indicators, and now it's just sitting here doing nothing for days or a week straight. But this is pretty promising overall.
Yeah, I'm sort of looking for around 82, 580-ish, like the daily order block. I'm looking for a bit of a tap in too before looking for lower time frame sort of reactions and upside. I do think we will see upside over the next sort of couple of weeks, but obviously just play it day by day, see what happens.
Yeah, that lines up perfectly with our pivot range here at 82.5 something. It's totally untouched
crazy how much
all
that
week. It's yeah. This range is completely untouched all week. Price has just been hovering over this whole entire weekly pivot. Price has not touched it. And we're about to print another one, I would assume. When did this start? Sunday at 8 p.m. Okay, so yeah, we've only got one more 4-hour candle left. And then this pivot range becomes completely untouched. That would be nuts. So I don't know what's going on here, but it seems like this should be a very strong magnet and attract price to it. So I would not be surprised if we saw a crash. Now here it is dropping down. This looks like a nasty rejection. This daily pivot range here, it dropped, and then it just failed to reclaim right here with this candle, this blue candle, and down we go. So this level right here, you can see this is obviously a very strong previously historic support and resistance level, because price has bounced off of it from above and bounced off of it from below. So this, I mean, this is it right here. If this does not bounce or wick below and reach and recover, it's game over, and we go down to that weekly pivot range. And honestly, right now, let's check the 1 minute chart. I don't know. Fine tune this level here a little bit. Look at that. It's gotten a teeny tiny reaction on the 1 minute chart, but I want to see some big candles close above this line before I get bullish. So yeah, overall I am bullish in the long by the end of this coming week. I think we'll be boosting to the moon, but it's gonna be a nasty either overnight, Sunday night to Monday morning, or Monday, Tuesday crash. I don't know. Let's pull up NASDAQ.
He's asking to explain. TT's is asking to explain the market maker mindset. More simply.
Okay. Yeah. Wow. This is, oh my goodness. Okay, so the stock market, we'll get to that in a second. Market maker mindset. Look at this. The stock market gapped down pretty hard. We have, this is a reason for a retracement up, but that is interesting. So let's see here. Yeah. So the stock market is already chewing into this similar range here. Just like we saw with Bitcoin, it had these double dips back here, and this wasn't the same exact bullish divergence that Bitcoin gave, but still it was a great long if you got in either one. But it's already kind of broken through this level here, and I am not that confident in it finding a bounce just yet, I guess.
Yeah, I still see more hurt in the like normal markets than I would in crypto. Excluding alts, of course. Alts always bleed.
Yeah. But yeah, let's talk about the market maker mindset. What we're looking at when we look at, let's hide everything. I'm going to do hide all. And I'm going to go to the daily chart. Here's the stock market. Okay. The market maker mindset, I try and think of it as someone with a lot more money than me, infinitely more money than me, effectively speaking. Someone with an infinite amount of money could control the market. If they could control the market, what would they do? They would just they would have to rely on scaring everybody in order to sell to them low, or they would have to trick everybody into buying when they want to sell. Okay, so let me draw some boxes here. Man, my computer is lagging. I'll hide that. Range shorts, range longs. So imagine you have an infinite supply of money. How do you convince other people to trade with you if you have more money than them and you could control them, you could manipulate the market? Or if someone else, if we know that the market makers are all smarter than us and they have an infinite supply of money, we would not play the game, right? It would be like going into a casino. If there's a sign on the door of the casino that says, hey, everybody, you're going to walk out of here broke. You're going to lose all your money. Welcome to the casino. Fewer people would walk into that casino. They'd see the sign and be like, well, screw this. I'm going home. So it's the same thing with trading. If you are the house, the market maker, you're the casino, you have all the money, how do you get people to play with you? You cause terror, fear, panic at the bottom. You scare people into selling to you. They sell, you buy. They sell in fear, you buy calmly, patiently waiting. And then at the top, because you have enough money to not let price go lower than you want it to. This is hypothetical because that doesn't actually, that's not actually the case in all markets. Sometimes the market maker is wrong, but you can't expect them to be wrong. You have to assume that the market maker is right. If the market maker knows that they can quote unquote defend this level, then they are buying an absolute ton of something down here and they are selling it. Who are they selling it to? How do they sell it? They have to convince people to buy, and the best way to do that, if they've got an infinite supply that they want to sell, is to get people false hope, FOMO, fear of missing out, or whatever it is. That's how they get an idiot to buy the absolute top, is that person is emotionally convinced that it is just going to go absolutely bonkers from here. Who bought right here at this point? Anybody who bought right there? Hang it. Anybody who bought up here at this top? Oh my gosh. My computer is a little slow. Imagine you bought right there. And then imagine you sold down here.
In a panic.
Yeah. The only way you're going to do that is if you are making an emotional decision or you are being absolutely forced by a liquidation or stop loss. That's the only way you're going to make these terrible worst decisions. So I hope that explains the mindset of market maker. Let me see what else we got. I got a lot of comments in the Discord today.
Yeah, he says that helps.
Yeah,
so I think what he's trying to say, to give like a synopsis, is that market makers have to induce emotional state of retail. And so what they like to do is set up these big fear or FOMO situations in which will get the retail to essentially chase into the trap that they set.
Yeah. And what we, as retail traders, we will never have enough money to play their game the way they play it.
I was thinking about
you could possibly play the game with a tiny low cap altcoin on some Solana chain or whatever, some other network. There are cases of market manipulation by small players. Like if you're on one of those tiny little coins and you're in, if you own 10% of the supply, you see this all the time on the Solana network and all those meme coins. So there's one guy who owns 10 or 20% of the whole coin. That is a market maker. If he sells 20% of the entire supply of that coin, or she or whoever they are, if they sell 20-30% of the supply of the entire coin, they are moving, the price will move.
So I was thinking about this the other day with altcoins, like really small altcoins. Let's just say you have $100,000 to play with, and you set 50, half of it aside, and you slowly do incremental purchases over time to try to induce retail to pump in there. Like, oh my god, it's happening. So you slowly add it in, and with the other 50%, you essentially get it to where you start seeing the spike of volume coming in from retail, and then you open up a short right there, and then sell your spot position, and then you essentially just massively profit from that, just from your own spot sale. And like you can,
yeah, there's a lot of psychology going on in the whether you go long or short, whether you are trading futures or spot. There's a whole lot of, gosh, you can't hear my alert, right? My alert is going off in my ear like crazy. I have it set to be a frog, the frog croaking sound.
No,
I don't know what's going on, but
yeah, I have your stream muted for the music to provide the best visual and audio experience.
Look at this bounce. We're getting a bounce. Interesting.
Right where you said it would be.
Wow. So we're only on the 1 minute time frame. This is promising, but it's only a 1 minute bounce. We want to see it bounce on the 15 minute, the 1 hour. We got a 15-minute bounce. We still got 20 minutes left in this 1 hour candle. So yeah, like this could be it, but we just have so much down below that like this all the way down here, like we were saying, 82,005 something. That's just begging to get tapped before we go to the moon.
And we have to remember it was like a holiday week for a lot of America and the Western world. So you had Lent on Friday and then Easter on Sunday, as well as whatever ancillary holidays happens around that time. That's practiced within all these different time zones. So I could see it being a low trading volume week up till today, and I bet we're going to see some action. People get off from a long break, ready to get some money in.
Yeah. This is the last thing that I'll say in terms of psychology on this particular subject for today and that is whenever you see a gigantic, massive move in the market, you should assume that a market maker just, they just pocketed millions of dollars in profit. What happens after that? They go on vacation. They get out of there. They take a day off. They take a week off because they know that they just got their opportunity. The market played into their hands exactly how they wanted, whatever it is. They made their bank and they are going to go on vacation.
And
so after a massive move, what should you expect? You should expect chaos because that big market maker's objective got accomplished and he's not there to play around anymore to force price to move in a big way. So what you expect is chaos, destruction, just chopping back and forth, everybody, shorts getting liquidated, longs getting liquidated. And also around a holiday like this, where we just had all of this tariff insanity in the stock market, the crash profited the hedge funds billions of dollars or trillions of dollars. They bought the dip and profited more without going on futures, whatever they're QQQ, buying and selling. The big players on this stock market crash, the only people that really died are the retail traders. The big players, they rode it down, they bought the dip, they rode it up. And so now they're on vacation. They're enjoying their Easter holiday. And that is why after a massive move, I tend to try to avoid the market as well, or at least only take perfect setups and then stick to your risk rules and then walk away if it doesn't work.
Yeah.
Because that's what happens after when the big players are not there. Like, imagine you're playing a team sport, but there's no coach, there's no referee, there's no nothing. It's just a bunch of kids in total chaos, screaming at each other, making up their own rules, breaking the rules, whatever. You have no guardrails. So you're going to get stopped out of your trades like over and over and over again if you get too bent on, oh, this has got to happen next. It's gonna, this crash, it crashed so hard, it's gonna rocket back up. No, it's not. It's gonna hang around and do nothing if it wants to. And you need to be patient to take a risk here and there, walk away if it doesn't work, and watch for the next sign of the telltale sign of what market maker is interested in doing next. Like, we could go on the 1-day chart and see, are there any vector candles? This yellow candle already got eaten up a little bit. Small pivots. Oh, that's weird. Yeah. There's no vector candles. Oh, there's a blue candle, but it's already engulfed. Check the weekly. It's basically not much going on. So, yeah.
We have to remember too, it's like a market maker's in there controlling the temperature of the sea, but as soon as he leaves, it's like a kid splashing in water with all the different retail traders just essentially fighting over price. As well as how many retail traders are there? I mean, not retail. How many whales are there, market makers? Like, there's not that many that actually go in, and when they do, it's noticeable. Like, maybe a couple thousand. You know what I mean? A fraction of a fraction of a fraction of percent of actual people that wield that kind of money in specifically Bitcoin.
Yeah. So this is my advice to the general public and to our private Discord members.
Not financial advice.
Yeah, this is my I always call it gambling advice because we're trading crypto. assume that there is always someone watching the market with an infinite supply of money. That person can be wrong, but you have to assume that they're going to be right. You also, at the same time, you have to assume that not every single move that happens is a massive life-changing amount of money. You have to operate and trade as if it is just one day at a time. And then if you see the telltale signs of a market maker possibly getting in or out of the market, you do not go all in with every dollar you've got or whatever, because you think you see the telltale signs of a market maker and it's gonna make a gigantic, massive move now. You cannot afford that. You must enter and exit the market as if you need to survive, 5 or 10 losing days in a row, 5 or 10 losing ideas in a row. So yeah, if you see a market you see the telltale signs of a market maker. Let's see what the par is doing here. If you think that this is it, this on the 4-hour chart, the 1-day chart, we've got squeezes going on. We could believe that this is it. Bitcoin's going to 150 grand. You cannot afford to risk your entire portfolio on that. You have to play it safe. Watch the signs. Maybe you double or triple your risk, maybe you usually only risk 1% of your account. And this time you're like, oh my gosh, this is it. I'm going to risk 3% of my account. Well, congratulations if you lose, or if you win, that's awesome. But you still have to be ready to walk away from it and carefully decide on what risk you're going to take. Maybe the price action has been dead for an entire week and you just haven't traded much at all. Then, okay, hey, you know what? Risk quadruple your usual risk. Say you usually risk $100 per trade, and you've done nothing because his price has just been absolutely dead for a week. Maybe you want to risk $500 on a trade, or $300 on a trade right now. Fine, go ahead. But I guarantee you the emotional destruction of if you lose that $500 risk when you're used to risking only $100, that emotional destruction is really not going to be good if you lose that trade, if you're wrong about this and price slams down again. So I don't recommend it.
We have a couple questions. Do you want me to read them to you?
Awesome. Yeah.
Okay. So Magbane's asking, this is what I see in here. Instead of positioning for a big move, people are engaging in trading after a big move has occurred. Why?
I don't think that's what we're trying to say. That maybe that is what people do, but that's definitely not correct. We ought to be getting positioned for the big move. I don't think getting into the market after a big move has occurred, that's as a strategy that wouldn't make sense. What we're emphasizing is no matter getting positioned for the big move cannot involve risking your entire portfolio on that one move. That's the point that I try to drive home every week is, yes, we should be getting positioned for the big move. If we see very large price levels and we perceive or think that a massive move is incoming, we want to be on that train. We want to be a part of that big move. But I'm not going to suddenly risk 50 or 75% of my entire account just because I think that is the big move. And it's been boring for a week, so therefore I'm going to risk a ton. Mm-hmm. So I think that there is some, and Magbane, maybe you can elaborate a little bit on the exact type of entry or exit that feels like waiting until after a big move has occurred and then getting positioned. because that's definitely something we would want to address and clarify. And I think the par in general, as a great example, is a great example of how to be positioned for the big moves. And that's why I look first and foremost at the par on the 4 hour and the 1 day. Because when you have large time frames in oversold or overbought territory, that's giving you the gradual signal that, hey, we are getting ready for a reversal and a potentially huge move.
That's one of the strategies that Kermie thought up with the par when he created it. He wanted to catch those big moves, and so he was like, his whole goal was to try to simplify trading, so he could actually just look at one thing and be like, okay, well, this is indicating that there's going to be a big move, and then pivots. He says he uses for the levels of where he enters and where he sees bounces and price reaction.
Let's go one step further and let's just look at the 1 day par. Okay. This is obviously a loss right here. This got way absurd, and we probably would have tried to short that right there, right? This right here would have tried to short that, would have gotten stopped out because it was not a massive move.
What time frame is that par on?
1 day.
Oh, it's the 1440.
But you could also have, yes, you would have also seen a divergence here, and that would have been a move that paid for itself. It gets stopped out, but then you also get another entry here. And so if you're getting in anywhere around here, we're on the 1 day time frame. If you're getting in anywhere around here, you theoretically can ride this move all the way down. Now, what do we see in this situation? What I see is a massive bullish divergence here. And so with this printing, one of these candles around here, let's jump from Heiken Ashi candles back to regular candles. One of these candles around here, it looks as if this 1 day candle closing, if you entered long at the close of this candle way up here, that looks like you're getting positioned after the big move has already played out. But in the overall grand scheme, what this move from the 1 day par from bottom to top, that could have been a move that was very big, because that's what we've seen in the past when the par moves all the way from oversold to overbought or overbought to oversold. That could be a massive move. So getting in here could have been huge. And also we had an entry that was a lot tighter using the 4 hour or the 60-30. So overall, I do want people to be patiently waiting, looking at the bigger time frames that show them when there is opportunity to catch, to be positioned for the biggest moves. And I think what it all comes down to is that there's a lot of different entry systems that people can claim to be perceptive enough to say, oh, well, I got in right at the exact bottom because I knew that for whatever reason over here, you know, like if you're looking at one of these highs or this this fair value gap right here, maybe you front ran that fair value gap right there and you got in at the exact best price. That's awesome. I think that's a expert, you know, extremely high level strategy. Yeah, look at that. It did tap it. That 1 day fair value gap just barely got tapped. my computer's lagging a little bit. Can you guys still hear me?
Yeah.
I'm just going to switch to the 5-minute because this is going to take forever. Oh man, my computer ain't happy. Good grief. Where am I? Here we are. Come on. Look at that. That's ridiculous.
We have another question.
Yeah, to anyone who caught this entry, like, this is a once in a lifetime situation. To get in like that on that 1 day fair value gap down to the what? How many dollars?
MacBain got in at 74,460.
Yeah. MacBain, was that because of the fair value gap? Because that's, I mean, that's flawless.
Yep.
And we've seen that, I've seen that happen pretty regularly on various coins. Like we saw Bitcoin and also XRP has had a couple of just absolutely perfection bounces off of a particular key level. But I just don't see those showing up every single day on such a gigantic macro level in order for me to call it a comprehensive whole strategy that is the only way you trade. I love doing this, and I have had various over the past year, I have had plenty of entries that are just absolute knife catches. But honestly, a lot of the time it just shreds right through the level and you get stopped out. And that's just how it happens. But that's a beautiful, like, looking at the par, let's see what was going on here.
T-Teaser's got a question. Do you scalp, and the close is going to happen within hours? And I'm assuming it's current candle close.
What's closing?
I'm assuming
so 1 hour candle.
BTC daily.
Oh, the daily candle.
Yeah, but he's asking if you scalp.
Yeah, see, this entry right here had a beautiful confirmation of on the par. Had a nice bullish divergence here. That's a fantastic long. I think this price action looks familiar. I think I got in at this dip right here. I forget. This price action looks really familiar though. I think I was shorting on the par from up here. Not the par, the smasher. I think I was shorting from up here and then I got long somewhere down here. But yeah. Do we scalp? Yes. All of the strategies that we use can be used all the way down to the 1 minute time frame. And I think that that's a very great way to practice trading if your time is limited throughout the day. Then pick a time frame or a window of time and just trade during that time. So the problem with scalping that many traders face is they scalp all day, every day, and that destroys them because the price action is inconsistent from hour to hour. And so a trade that you take on the 1 minute time frame at some random god-awful hour of the night is not going to be as reliable as if you're trading right around New York Open, London Open, Asia Open, Market Open, the first hour of those trading days. Those are good, reliable times to trade. And that would be my recommendation is if you want to scalp, pick 1 hour that you trade or 2 hours per day that you trade. You only trade within those times. You start on the 1 hour or the 4 hour to get an overall idea of where the market's going. Like we look at the par on the 4 hour in the 1 day time frame. And then within that time frame or window of opportunity that you give yourself to trade, you go down to the 5 minute and the 1 minute time frame and you find your setups at whatever key price level or whatnot you want to look for, and you enter 1, 2, 3, 4 trades during that day or that week or whatever, and you do not just constantly be watching the charts all day, every day, looking for scalp setups, because then suddenly a day has gone by and you've taken 60 trades and you're down, 20% of your account. So we do scalp. That's my best scalping advice is be careful, be methodical, pick a time during the day and pick a risk. Say, I'm only going to trade New York Market Open, Bitcoin or NASDAQ or whatever altcoin is hot at the moment. And you're going to have a system of, lining up your trades so that the 1 hour favors your trade, the 15 minute favors your trade, the 1 minute favors your trade, and then that's how you scalp.
Yeah, and if you're doing scalps right, a scalp will turn into a day trade. You'll catch some of those every now and then, and that's what Kermie likes to do. Is I think he likes to day trade, but he'll start with scalping, and it'll lead into a longer position.
Yeah. This is looking good.
Most people that I know scalp and they hold on to like long-term trades, like a swing trade. Like scalps turn into swings or day trades if you're doing it right. And then you're up, 400%. The thing with scalping though is exercising great risk management. If you're gonna be trading a lot and doing multiple trades a day, don't blow your portfolio. You know what I mean? Like you gotta have really good risk management. Know how much you're putting on each trade. Know your risk factors. And it's fairly quick. It's pretty rapid fire as far as like if you're rocking the 1 to 5 minute time frames. So for me, I like a good way to learn for me is to start with the higher time frames and then get the skills in order to keep bringing it down to the faster time frames. Yeah, patience is key.
Yeah.
And I consider it like setting up little traps. So you're looking for levels, you're looking for a price to react at those levels, confirmations come in, and then you're entering.
Yeah. I think there's a bunch of different ways to learn or master trading. And it all depends on what how much available time you have in your day. If you only have 20, 30 minutes a day and maybe it's at any time of day, maybe it's a specific time of day, then you're kind of forced to trade on the smaller, faster time frames and just learn based on while keeping in mind that these time frames are less reliable. Then when you've mastered some level of skill and you're getting serious and have more confidence that you could trade profitably consistently, then you can be like, all right, I'm going to be more picky. I'm going to set an alert for a price level or a time. And then I'm only going to trade if the 4-hour or the 1 day aligns with my bias and take some bigger plays.
Mm-hmm.
You want to get positioned for the big move. Sometimes you might have to set your alarm for a price level in it, and the alarm goes off at midnight or whatever, and you got to get to your computer. But if you're serious about it and you have already mastered the general technique, then suddenly you'll find you're like, oh wow, this bigger time frame is a lot more reliable than the stinking 1 minute or 15-second time frame that is a lot more frustrating to trade. And I guess what I meant to say with that, my whole point there is there's more than one way to learn how to trade. And what matters is consistently sticking to a plan so that you can assess that plan with hard data to know whether or not it even works. Because if you're just doing a bunch of random nonsense all the time, changing your rules, trying something a little different all the time, then you don't really have anything to go by, and you'll never know if if a strategy is actually working or not.
We're approaching the hour mark. How are you feeling? Do you want to try to take some coins to see chart some coins for people, or do you have dinner plans?
Yeah, do we have any? I just glanced at BTC and the stock market. Do we have any requests for specific coins to check out? I know that basically right now we are poised for a pump. So I want to know, we could check our private Discord for the signals. Not much going on.
Oh, just to give you guys an update too, we are working on a few more bots to add to the server. We're working on a bot that'll follow
Ooh, the Melania
whales.
coin popped up.
We have a bot that'll follow like a set amount of wallets. So we're gonna be looking into that and getting it to send us signals on Discord, as well as we're working on a narrow CPR bot. We got some irons in the oven, is what I'm trying to say. Some biscuits in the oven.
Look at this payout. Melania paid out. Ding, ding, ding. Nice little short there. Let's see what the strategy says. Oh no, it's not profitable on the 1 hour. But that's only 12 trades. Oh yeah, 12 trades. Yeah. 6 trades not profitable, but when I crank it up to 12 trades, it did generate a profit. Nice, nice. Yeah, look at that. Short win, short win. Oh, that's brutal. I bet. Oh, okay, let's watch this trade analysis. Long, short. There are 0 longs. This is hilarious. Look at that. This Melania coin has had 0 long trades in its entire trade backtest history. Oh, that is just brutal.
Let's check out Hype.
Must be gonna,
Let's check out Hype, and I'm not seeing anybody post any coins. So we'll just do Hype and then we'll call it.
Yeah, cool. Yeah, Hype has been chopping. It looks like we're in a trade, and it's trying to get up there. Trades in profit. This long got stopped out. This long got profitable. Yeah, so Hype. Oh, let's see. Here's all my technical analysis. That's brutal. Hype has crossed into bullish territory for sure. We really got a nice bottoming effect here. The par 1 day, if you can see this pink line here, had a big old bull div right there to there on the 1 day. So that was this little blip right here was your big old buy signal on the 1 day par. And from $11 to $17, even if you're at 5 or 10x leverage, you're already in profit, covered your trade, etc.
I expect Hype to be on the same trajectory as BNB and all the other exchange coins out there. Right now, obviously, it just doesn't have enough name recognition, but
Yeah.
the fundamentals of the exchange, I think, are a lot more solid than
Yeah.
other decentralized exchanges out there. Minus the
Yeah.
incident they had with somebody trying to liquidate the entire exchange's vault. That was a little bit of action against a decentralized community that they had to take.
Oh, geez. Oh, hey, yeah. While we were talking, my BTC dipped by hit profit. Nice, nice.
Sweet. Do you have any projections for where Hype could bounce to? Even though we have limited historical data.
Well, we're in the same situation as BTC, where we had this low, and then whenever I don't trade based off of Fibonacci levels that often, but whenever I see a move up and it just completely ignores the 50% and the golden pocket, I usually tell myself, expect a crash or expect a retrace. So, and also at this level, this old historic level here, see how Hype's this old level here lines up? No, not that one.
You want to hide the pitchfork? It's a little noisy.
Yeah, let's hide everything except that. See how this old low corresponds with respect from both above and below? And it lines up with the golden pocket of this first pump. That means that at around $12, there is an absolute ton of liquidity. So this is a great example of what Magbane was talking about, knife catching. Like if you want a long-term spot trade, have your orders down here, right around this level, $12.21, 1221. Get that golden pocket buy. And because if price gets down here, that's going to be everybody's freaking out and panicking, just like we were talking about earlier. And that's your opportunity to get in, get positioned long. Having said that, obviously it could just rocket to the moon from here. We always have to say that. But the 1 day, let's hide everything. The 1 day chart has already gotten back up into overbought territory. This is not a bearish divergence on the pink, the 1 day, but it is getting kind of bearish on the 4 hour here. Look at this. Let's switch to regular candles. Yeah, that's a bear div. If we go down to the smaller time frames, that 4 hour, that is a bear divergence right there. So 4 hour bear divergence. I could imagine it getting down to this level. But this is one of those coins that we believe in long term, like you said. I think that hype and decentralized exchanges in general are the future of trading. And especially here in the US, like we kind of got shortchanged by this quote unquote pro crypto White House administration. Yeah, they're pro crypto, all right. They're pro money in their own pockets,
Um,
rug pull crypto.
I
That's what they're.
I did a little
So-
digging into that, and we're gonna see some legislation I think come out in like July. So it's on the docket, but I think
That
it's in
is-
the back burner as far as other priority of things.
Well, now I have to ask, what kind of legislation are we talking about? Favorable to crypto?
Stablecoins.
Because-
Specifically, it's about stablecoins, and I'm kind of curious to see what else they add into there. And so, coins like XRP and Cardano, other US based coins are probably going to see a bump to more favorable
Yeah.
reactions. But yeah, you're right.
Well-
Like they definitely are doing a little bit of a bait and switch.
Yeah, I think, and we should have expected this because regardless of your political, social beliefs, we know that Trump is a greedy ass who's serving himself. We should have expected that the little guy, quote unquote, was not going to get immediate attention and service in terms of like, oh, crypto exchanges, you don't need KYC, you don't need a VPN anymore, you know? Of course he was going to do his own coin and do this rug pull Melania coin, Trump coin nonsense, put money in his pockets.
Well,
And then later he gets around to doing pro crypto legislation for the little guy who wants to trade or you know the blockchain technology, the future of that. Then he's getting around to it later.
Think of it
So
like, think of it like this though. It's he's putting skin in the game. So even if it's a rug pull to some degree, like he's still got skin in the game, and that's gonna probably incentivize him later down the road to probably instruct or guide more favorable action towards crypto and trading in general. I heard some other things that were bubbling down where he was going to look at a certain rule that that it affects private equity, and it's a revocation of a rule that Clinton signed in the 90s in which they can use private equity to buy debt and essentially buy over a bunch of corporations and charge them interest higher than what's normal on the debt. And so a lot of these big chains like Jones are subservient to these private interests, and now the interest payments on that debt that's getting serviced by this private interest is higher. They have to pay out more than what they're making. And so I forget what it's called specifically, but like
sounds like a recipe for disaster.
yeah, getting rid of rules like that I think will really help us in the long run. So there, like I said, this is stuff on the back burner. Like this isn't the top of his list of stuff to do, and you got to think that the midterms we're probably going to get a swing in the House. So he's only got he only has 18 months effectively to work with. So how much could you possibly do, and how much could you chip away at that giant docket within 18 months? You know, so giving him the benefit of the doubt. You know, obviously I do understand your position of this needs to stop. Like we need to stop this boycotting of U.S. traders effectively.
Yeah,
because that's
it's been
a whole market share that's being sequestered.
Yeah. It's been really frustrating as a trader since 2021 or 2020, whenever I got into trading.
Mm-hmm.
Coinbase is the only platform, the main platform that's legal in the US, and they're just abysmal.
Yeah.
Like their fees are absurd. If you get in and out of its trade on spot, you're paying like 1.3% in fees.
Yeah.
And there's no leverage, and you can't go long or short with like, well, you can now because they just recently introduced futures, but it's a really crappy, limited situation.
I completely
but
agree.
anyways,
hold on. One
all of these overseas exchanges are destroying the US market. And I think I was expecting legislation that made it easier for us to trade with overseas exchanges, but it makes sense that they're probably like Coinbase probably is a donor to Trump.
Yeah.
And they want to own the market. They're not going to easily, like there's crypto.com, another US company. They want to own that because it's gambling effectively. They want to own that market. And so they're probably carefully plotting to come up with their system, their exchanges, so that we can lose all our money trading crypto. But it's a US company that profits from it instead of some overseas company exchange. And that's unfortunate, but it makes sense.
It's acceptable. That's acceptable. Like I get that. Like that's understandable. The scuttlebutt was that hype thing that almost completely liquidated hype's entire vault. That was apparently an operation that was conducted by other major exchanges. So they were trying to knock hype out of the market, and so it forced hype to do non-decentralized actions against its ethos. But also,
I would not be surprised.
I do want to mention this as well. We're only what, like 3 months in to this administration. He just was, I guess, confirmed one of his nominations to the SEC chair, who's favorable to crypto last week. So, in a relatively speaking, in a short amount of time, like we're getting rid of fucking Gensler, and we're replacing him with somebody who's more crypto favorable. So these processes to get these people in these positions has been stonewalled, and it's been slow to move. So I get the frustration, but we gotta keep an eye on what's like where the pawns are being placed, where the knights and the rooks are being placed on the table.
Yeah.
So I'm 100% with you though. Like I'm completely frustrated by this as well. Like this is bullshit.
I'm glad that I am past my phase of trading totally degenerate meme coins. We do have strategies for doing that, and we do have traders in our private Discord who successfully trade meme coins.
Mm-hmm.
But I'm glad that I'm past that phase in my trading journey, such that when the whole Trump coin, Melania coin thing happened, I wasn't even paying attention. I'm just trading Bitcoin, I'm trading NASDAQ, and that's it.
It's one of those things too, where it's like real world use cases are coins, like little shit coins that I think provide more value. And anything that's based off of a meme, like it's just right out of me trading. Like maybe as a degenerate, like I'll throw 20 at it or something. But like for me, like I just instinctually stay away from shit like that. I'm a fundamentals kind of guy. So things with good fundamentals and good principles, even though we don't know who made Bitcoin, the fundamentals of Bitcoin still stand and are still firm. And that to me is the gold standard in which I like to conduct my trading.
Yeah, exactly.
So, all right, everybody. I think we'll call it here. Thanks for joining us on this Sunday evening. We are switching up the streaming schedule, and it was kind of a holiday week, so we gave Kermie last week off. So we're going to be streaming Sundays, Mondays, and Wednesdays, and I think we might try to get Moist streaming early in the mornings as well. So I'm going to try to be there for that, but it'll be like 4 a.m. my time or 5 a.m. my time. So expect that.
Yeah,
expect that happening. We got some changes going on. We got some new things coming into the server, some bots signals that'll give us coins to look at more clearly. So we got some things working, and I really appreciate everybody joining us and being a member and sticking with us as we're growing. But yeah, I hope you guys have a beautiful Easter or had a beautiful Easter, and I hope that you guys have a great rest of your week trading, and we'll see you guys in chat. Thanks for
Yeah, hit me up in the private Discord anytime if anybody wants technical analysis with any of our indicators. I am happy to go over a coin with whatever indicators you like, or whatever strategy, whether you trade ICT or whatever strategy. Hit me up in the Discord, the private Discord,
Also,
and
keep in mind of
I'll be
imposters.
around.
We had an imposter that was impersonating me, so be mindful of that, and make sure to do your due diligence when accepting friend requests and DMs, please. So I take security very seriously in the server, and I'm implementing an investigation into that person. So just to give you guys a heads up. Well,